What's up, guys? My name is Pete, and I'd like to welcome you to another edition of Phipps Tips. In today's episode, we're going to take a look at the overall market. We're going to check out its top performers. We'll have a look at today's biggest winners and its biggest losers. A couple of news articles today, guys. Coinbase on track to be bringing in, regulated securities. We'll see about that. SEC says that U.S. crypto exchanges aren't enthusiastic enough about, them being regulatory compliant. So we'll see what that has to say. Then we're going to wrap it all up with a little bit of Bitcoin technical analysis. All that and more coming up, guys. Stay tuned. We are on CoinMarketCap.com, guys. The market cap rolling in at $346.3 billion with a 24-hour trading volume of $15 billion and Bitcoin dominance checking in at 37.9%. Of our top five, guys, Bitcoin up 2.22%, Ethereum up 1.73%, Ripple up 2.71%, Bitcoin Cash up nearly 3%, and EOS up 5.26% on the day, guys. Movers and shakers versus Bitcoin, we have BuyBox token up 13.34%, Nano up 7.44%, Huobi token up 7.11%, Omizi Go up 4%, and Kryptonics up 4% as well. So guys, I want to talk about these tokens here. We can see Binance Coin, Huobi token, and BuyBox token, all of them in the top 10 against Bitcoin today. If we scroll down, I wonder if we can see like KuCoin shares in maybe the top here. That being another one of the utility tokens that one of the bigger exchanges use. I'm not seeing it here on the top 100, guys, so not to say anything bad about it. These tokens, guys, I was listening to Carter Thomas for the past couple of days, watching his videos and stuff, and he made a very good point that these tokens, these utility tokens that exchanges are putting out, this BuyBox token, this Huobi token, and Binance Coin, these coins, guys, as crypto becomes more and more and more mainstream, these tokens are going to do nothing but get more and more and more expensive and more popular, because these tokens not only do they offer, higher liquidity as the price increases, but these tokens also have a utility to them, meaning that, they're used to have your fees whenever you're on the exchange and whenever you're making trades or buying or selling. These tokens half the fee that you pay, and you pay the fee in the token. So, you save whatever coin it is that you're trying to trade with. That's fantastic, guys. That is fantastic. And like he stated, as more of these exchanges do this sort of thing and are successful, you'll see other companies become more like a monkey see, monkey do. It's like, oh my gosh, Binance is just making money hand over fist with this idea. So what are we doing? Why aren't we getting into it and trying to, get a piece of this pie and get a piece of this market? And as time goes on, guys, you'll see more and more and more exchanges doing this. And hopefully, I would love to see exchanges like Bittrex do something like this and have their own sort of utility token. Because honestly, between Binance and Bittrex, those are the two exchanges that I use the absolute most. And I have I shouldn't say a ton, but I have a lot of Binance coin. And I'm glad I bought it when I did, because that thing has practically tripled in price since what I paid for it. So, guys, it's just something to keep in mind if you use BuyBox or Huobi or Binance or KuCoin. Their token that they offer is always a good investment. Always. And before I even get into this, guys, I should state that I am not a financial advisor. This is not to be taken as financial advice. I am doing this just for entertainment and educational purposes only. And with that said, guys, we're going to go on into our gainers and losers. And our number one gainer of the day is Embercoin, up 85.86%. Envion, up 69.45%. Masonus, that's new, up 60%. Swisscoin, up 54.11%. And eJoy, up 49.83%. Our biggest losers of the day, guys, Steam dollars, down 71.94%, which is nothing compared to the 300% that it was up yesterday. Zoin, down 63.79%. Xcoin, down 32.62%. Dignity, down 30.96%. And Bizop, down 30% on the day, guys. So there is your gainers and losers of the day. We're going to go ahead and move on into our news articles of the day, guys. Coinbase on track to becoming regulated securities firm. We'll see what that's all about. Stay tuned. First article of the day, guys. Coinbase on track to become a regulated securities firm. Cryptocurrency exchange Coinbase announced Wednesday that it was making strides towards its goal of operating a federally regulated broker-dealer. Chief Operating Officer and President Asif Hirji wrote in a company blog post that the firm is in the process of acquiring a broker-deal license, an alternative trading system license, and a registered investment advisor license. Once it has these licenses, the company intends to seek approval from the U.S. Securities and Exchange Commission, or the SEC, and the Financial Industry Regulatory Authority, or FINRA, to offer blockchain-based securities. Part of this effort includes Coinbase's acquisition of Keystone Capital Corporation, Venivit Marketplace, and Digital Wealth LLC, he wrote. Hirji explained on Coinbase's plans, writing, "We believe this is an important moment for the crypto ecosystem and yet another indication of the maturation of the crypto economy. If approved, these licenses will set Coinbase on a path to offer future services that include crypto securities trading, margin and over-the-counter trading, and new market data products." Beyond merely offering its own securitized tokens, Hirji said Coinbase could tokenize existing security products, bringing to this space the benefits of cryptocurrency-based markets. The benefits would include real-time settlement, transparent chain of title, and 24/7 trading, he said. The move comes just weeks after Coinbase announced that it had acquired decentralized crypto relay platform Paradex, and that it is planning to rebrand its GDAX service to Coinbase Pro, as previously reported. Coinbase also formally launched Coinbase Custody, its crypto storage service aimed primarily at large financial institutions, last month. As previously reported, Coinbase Custody includes a suite of products aimed at institutional investors. Hirji highlighted that what he saw as the potential of combining cryptocurrencies with securities firms in Wednesday's post, writing, "We believe this will democratize access to capital markets for companies and investors alike, lowering costs for all participants and bringing additional transparency, and inclusion to the ecosystem." So what do you think, guys? I mean, Coinbase just keeps making move after move after move. These guys really want to be the go-to place for crypto. And you know, I'm not a big fan of Coinbase. I think that their fees are astronomically high, and that is something that I hate to pay. I cannot stand to pay fees for something. You know, I get it that, you know, it's a platform and a service that you provide, sure, and that you need to be compensated somehow, which, again, that's fine. But when you're gouging my wallet just because you're pretty much the only on-ramp into the fiat to crypto space right now, guys, it's just a recipe for disaster. And as soon as another exchange gets on board with the fiat to crypto, Coinbase can kiss my butt. I'll doubt I go through them anymore. Why? Because number one, their fees are they're just too high, guys. Too high. Like I'll just tell you, I put in $275. I bought Bitcoin with $275. The amount of Bitcoin I got after the purchase and after sending it to my wallet was roughly $229. So guys, what happened there? I lost nearly $50 in fees alone. In fees. That is psycho. That should not be happening. And as soon as, more and more companies get the ability to offer fiat to crypto, I think the fee price will come down because, there's going to be competition in the space for it. So let me know what you guys think, guys. Do you think this is a good thing for Coinbase? I'm sure Coinbase thinks it's a good thing for Coinbase. And there's lots of people out there who think it's good for Coinbase. And crypto in general. I'm on board with it being good for crypto. And if, Coinbase can become regulatory compliant, the rest of the U.S. Exchanges can become regulatory compliant. And once that happens and they're able to offer on-ramps for fiat to crypto, I'll be sure to be looking into that. Just so you guys know. And when that happens, I'll let you guys know. Okay? Great. Our next news article today, guys. The SEC, U.S. crypto exchange, is not enthusiastic enough about regulatory compliance. Is anybody ever enthusiastic about being compliant? Doubtful. Let's get into it and let's see what this article has to say. The U.S. Securities and Exchange Commission, or the SEC, said it was underwhelmed by regulatory adherence among cryptocurrency exchanges in fresh comments June 6th. Speaking to CNBC, Brett Redfearn, the SEC's Director of Division of Trading and Market, suggested exchanges that offer trading tokens issued in initial coin offerings, which may constitute securities under U.S. law, were reluctant to comply. We're underwhelmed by the enthusiasm for coming within the regulatory structure right now, he commented at the Sandler O'Neill Global Exchange and Brokerage Conference in New York, adding, there are a number of exchanges that are trading ICOs that I would think that we would see more registrations. Redfearn also acknowledged that even if reported, regulators did not always have an easy time classifying such tokens. Quite frankly, not all of them are obvious on its face exactly what it is, he added. Redfearn's comments came just hours after the SEC chairman Jay Clayton also weighed in on the current situation regarding cryptocurrencies, ICO tokens, and U.S. securities laws. Describing Bitcoin as an example of a cryptocurrency asset which is not a security, Clayton told CNBC there was a strict difference between cryptocurrencies like Bitcoin and ICO tokens, where I give you my money and you go off and make a venture, and in return for me giving you my money, you say, you know what, I'm going to give you a return. That's a security, and we regulate that, Clayton stated. So there's a quick article, guys. I don't know about you, but when it comes to, towing the line, so to speak, as they're saying here, nobody is ever excited about being compliant and a sheep. Nobody is ever excited about that, guys. And, I don't see why they should be. For lack of a better term, you're basically jumping through hoops to become compliant with the SEC. Granted, I've said it in many videos, and I'm going to continue to say it until it happens. This space needs to be regulated. There needs to be regulation, so that those scammy ICOs out there aren't taking people's money that they've worked hard for. And, just scumbag companies who want to prey on people. And while, the SEC is there to keep companies like that at bay, they're also hampering the abilities for legitimate companies to offer, their initial product, because, ICOs currently in the U.S., under U.S. law, are illegal. And what that does, guys, is that keeps us as U.S. citizens, for those of us, or for those of you who are following me that are U.S. citizens, that keeps us out of the ICO scene, where, you know, currently most of the money in cryptocurrency is being made, is in initial coin offerings. And what that is, guys, what an ICO is, for those of you who don't know, who are new to the crypto space, an ICO is before a coin actually hits coin market cap. There is a phase where, you know, they're trying to build up enough money that they can get their projects off the ground. Once they've hit the soft cap, meaning they've got a set amount of money they would like to hit, and once they do hit that amount, then the project is good to go and they start going from there. If the soft cap is not hit, generally speaking, they are supposed to, the company that is behind the ICO is supposed to refund everybody's capital. 99% of the time, the soft cap gets hit, guys, and then, you know, on into the stages of, you know, working on the project. And this is where a lot of ICOs, and, you know, there's stats running about how many ICOs are successful and how many fail within the first 6 weeks or the first 8 weeks or the first 2 months or the first 3 months. You can throw a stick and hit any number of statistics there, guys. But, you know, there are the ones out there, guys, that are legitimate and they really do have something to offer, and they are really trying to solve a problem with their blockchain. And, you know, with the ICO craze that's going on right now, it's only natural that, you know, people be wary. And, you know, I want to tell you guys again, do your own research. Read what the company's trying to do, but with their blockchain and with their coin and their offering. If it sounds too good to be true, 9 times out of 10, guys, that's exactly what it is. That's exactly what it is. So, you know, just keep your eyes open. The SEC actually made a website hosting a fake ICO. You guys should really, I looked at it, I think it's a fantastic idea. The way they've set it up is brilliant. And it's something that you really should look into to, you know, get the idea of what a scam looks like in this space. That way, when you start looking into ICOs and, you know, things, you'll know, you know, what red flags look like and what they are when you come across them. So, you know, there's that, guys. Drop me a comment down in the comment section. Do you think that exchanges should be enthusiastic about compliance? I mean, we've seen other exchanges like Binance get slapped with, you know, Japan's Securities and Exchange Commission. I forget what it's called, the FSA, I believe, Financial Security Administration, something like that. Wanted to look into Binance, and Binance says, no, we'll just move out of the country, and they did, and they moved to Malta. So, you know, I think that the U.S. needs to take a gentle approach to this, or else they're just going to force, you know, their exchanges out of the country, meaning that the money that those exchanges bring in will also be leaving the country, and nobody wants that. Nobody. So drop me a comment down in the comment section, guys. Let me know what you think. We're going to move on to our technical analysis of Bitcoin. Stay right there. And here we are, guys, on the Bitcoin versus US dollar day scale using the Bitfinex exchange information. And I've left up the indicator, the 3 EMAs, the 50, the 100, and the 200-day EMA up, just so we can see what's going on. And this is the day scale again, guys. As you can see from what I've drawn yesterday, Bitcoin has stayed in this upward channel that we've drawn. I drew out a little bit of an ascending wedge, but it looks like that we're kind of punching through that, so I'm just going to go ahead and remove that. And this is currently what we're looking at, guys. This right here, this upward trajectory. What I'm going to do is move us to the 4-hour chart. That way we can have a little bit better idea of what's going on. And as you can see, guys, the 100-hour exponential moving average is acting as a line of support right now. Look at that. I mean, it is literally holding Bitcoin's price up. Like Bitcoin's trying to punch down through it, and the 100-hour moving average is just acting as support, saying no, you're staying right here. That's great. What we also can see, guys, is that the 50-hour is like trending upward. Let me grab my draw tool here. And if and when this, upward trajectory continues, what we will see and hope to see is this 50-hour moving average do something like this and move up, and then we'll want the 200-hour moving average to do something like this, so they kind of cross, and then the 100-hour moving average just stay right in between. And this area right here, guys, this part, this section right in here, this is exactly what we want to see for bullish sentiment. We want the 50-hour moving average above the 200-hour moving average, and we want the 100-hour moving average right in between the two. That will signify that we are on an upward trajectory again, and that the sky is the limit. But currently, guys, from what we saw yesterday, at about midnight last night, a big green candle printed. And you know how I was talking about how the 6th of each month had like some sort of, big spike to it? Well, there it is, guys. There it is. Granted, this is saying that it posted on the 7th. This candle closed on the 7th. But the candle actually spiked last night about, I'd say about 10 o'clock Eastern Standard Time. So that while technically that's still the next day for crypto, like crypto rolls over at 8 o'clock Eastern Standard Time to the next day. So currently what we're doing, guys, is consolidating. I want to remove that. We're just consolidating, just a little bit of sideways action before Bitcoin decides what it's going to do next. And just from the looks of it, guys, I mean, we haven't had a green candle since this morning at midnight or 10 o'clock last night. Everything's been red. It's been doji after doji after doji, which means signals indecision or even a reversal. So what we could expect, I want to go ahead and remove all these here, guys, to get that out of our way, just to clean it up so I can draw in more stuff. What we could expect at seeing all this, guys, is this is not a good sign. It's a lot of pent-up selling pressure. So what I'm expecting is a breakdown to probably test the 50 again. And once that's hit, we'll bounce off. Hopefully punch back through the 100, because we definitely don't want that to be a line of resistance again. We definitely want that to be a line of support. We can see over the past couple of days, or actually it's been more than a couple of days, about a week now, that the 100-hour moving average has just been brutal to Bitcoin. Like, it's tried to punch through and getting rejected each and every time. And here, the 5th time it tried, finally it just broke down and we crashed a bit. Started to bounce back up, got back up above the 50, trended along sideways for a while, then tried to push up, and again we had resistance from the 100, and eventually last night we came through with some volume and blasted through it, and now we're using the 100 as a bit of support. But as we saw, this could just end up breaking down. We can only test a line of support for so long, guys, before it actually just breaks and we fall through. So again, as I state in just about every single video, and I'm sure everybody's sick of hearing it by now, we're on a wait and see to see what Bitcoin does here on the 4-hour scale. I want to take us back to the day scale now, guys, just to give us a little more broad view of what we're looking at here. And it honestly could be that we're in the midst of another Elliott wave, because this downtrend here could have been an ABC correction. Like so, like from here, we end here, B and C, like that. And then, we could just be on our wave 1 of our new Elliott wave, but we don't know yet. We don't know yet. Only time will tell. What we want to see, though, actually on this day scale, the day scale makes things look a lot uglier, guys. I mean, we're way below the 50-day moving average. The 100-day and the 200-day moving averages are crossing over, which is not a good sign at all. Like you can see, like the 200-day moving average is crossing over top of the 100-day moving average. The 100-day moving average is descending. The 50-day moving average is also descending. So that is not good signs at all, guys. What that's telling me is that we're looking at probably another downtrend, or at least some sideways consolidation for a few days before Bitcoin actually tries to make another move, be that either up or down. So again, I'm going to say, guys, we're on a wait and see kind of time scale, see what goes on. And that's going to do it for the video today, guys. If you're still with me after all this time, hit that subscribe button. And as I try to post a video every single day, Monday through Friday, if you learned anything today, hit that like button and share it with a friend. Your friends want free information and would love to learn about Bitcoin as well. Share it with them. As always, guys, thank you for watching, and I'll see you in the next one. Peace.